Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone cannot tell you. So please subscribe to this channel, and love you to all of my subscribers for your support. And please, watch this video till the very end because YouTube will not push my videos to more people. Today is Thursday, May 7th, 2026. The financial ground beneath your feet is shifting faster than at any point in modern human history. What you are witnessing right now, looking at the global markets, is not a standard correction. It is not a cyclical phase of inflation that will magically resolve itself when the central bankers tell you it will. We are watching the controlled demolition of the global financial order. At the absolute epicenter of this macroeconomic storm sits a single elemental asset, a metal that has been manipulated, suppressed, ignored, and systematically drained for decades: silver. Think back just a few short months to January of this year. Silver did what the financial elite prayed it would never do. It breached $100 an ounce. It peaked at a staggering $121.64. For a brief, terrifying, and shining moment, the veil was lifted. The true, unmanipulated value of the most heavily shorted, most suppressed asset on the face of the earth was revealed to the public. And then, almost instantly, the hammer fell. As of today, early May 2026, silver has been violently dragged back down to the $73 range, a massive correction engineered in the shadows. But I need you to lean in and listen to this next sentence carefully, because this is the hook that unravels the entire global financial illusion. The paper price crashed, but the physical silver is gone. Let me pull back the curtain on how this system actually operates. To understand the great deception we are living through, you have to completely separate the concept of paper silver from physical silver. When you open your phone and see the spot price of silver plummeting on the COMEX or the LBMA, you are not watching the sale of actual physical, tangible metal. You are watching a digital casino. You are watching a high-stakes game of musical chairs played by bullion banks and hedge funds. For every one single ounce of real, physical silver sitting secured in a vault, there are hundreds of ounces of paper silver traded through futures contracts, ETFs, and unallocated accounts. These contracts are created out of thin air. They are digital phantoms. When silver broke that $100 barrier earlier this year, it threatened to detonate the entire derivative structure of the major Western banks. If the price stayed there, the margin calls would have bankrupted institutions that are supposedly too big to fail. So what did the exchange authorities do? They changed the rules of the game while the ball was in the air. They weaponized margin requirements. They dramatically hiked the cost of holding a long contract. This forced smaller, leveraged traders, speculators, and even some mid-tier institutions to liquidate their positions in a panic. They were forced to sell. But they were selling paper contracts for metal they never actually possessed. This engineered margin squeeze created a massive, terrifying plunge in the paper price, painting a picture of a collapsing asset on every financial news network on television. But out in the real world, out in the physical markets where things are actually built, the panic is entirely inverted. Right now, major industries are quietly desperate. The premium to get your hands on physical silver, a real 1,000-ounce industrial bar that you can hold and use, has decoupled completely from the paper price. While the television ticker says $73, the real-world cost for industrial users who must bypass the frozen exchanges and pay for off-market physical delivery is vastly, shockingly higher. We are now living in a two-tier market. There is the price they project onto your screens to keep the masses docile, and there is the shadow price that sovereign nations, massive tech conglomerates, and defense contractors are quietly paying to secure their absolute lifelines. Ask yourself this one simple question. Why would a massive technology company pay a 30, 40, or even 50% premium over the spot price just to secure a physical delivery of silver? Because we have walked blindly into a mathematical trap of our own making, and the smartest people in the room are scrambling for the exits. Over 58% of global silver demand is purely industrial. We are not talking about silverware, and we are not just talking about jewelry. We are talking about the absolute foundational pillars of the 2026 global economy. Solar power, electric vehicles, 5G and 6G telecom infrastructure, advanced medical equipment, and, most importantly, the massive, insatiable, explosive energy demands of artificial intelligence data centers. The transition to renewable energy alone is devouring the global supply. Modern battery electric vehicles require vastly more silver for their complex electrical matrices than traditional combustion engines. But it goes deeper. The solar industry has recently transitioned globally from P-type solar cells to N-type solar cells. Why does that matter to you? Because N-type cells are more efficient, but they require significantly more silver paste to manufacture. The solar industry cannot simply stop buying silver because the COMEX price is fluctuating or because a bullion bank is playing games with paper derivatives. A solar panel gigafactory cannot pause production. They have to secure the physical supply at any cost, or their multi-billion-dollar operations grind to a halt. And then there is the AI revolution. The build-out of artificial intelligence data centers over the last 3 years has placed an unprecedented strain on the global power grid. To move that much electricity, to cool those massive server farms, you need the most conductive element on the periodic table. Silver is not a luxury for these industries. It is a biological necessity for their survival. Here are the cold, hard, unforgiving facts. The Silver Institute, historically conservative in their estimates, projects another brutal, undeniable supply deficit for 2026, to the tune of over 46 million ounces. This is the 5th consecutive year that the world is consuming vastly more silver than it is extracting from the ground or recycling from scrap. We are eating into the above-ground stockpiles at a terrifying rate. We have a structural, systemic deficit. You cannot print physical matter. Jerome Powell or the newly nominated Kevin Warsh cannot sit in a leather chair in Washington, D.C., press a button on a computer terminal, and digitize 1 billion ounces of physical silver into existence. They can print trillions of fiat dollars to infinity. They can keystroke credit into existence until the currency collapses under its own weight. But they cannot print the conductivity, the reflectivity, the antimicrobial properties, and the physical reality of atomic element 47. The Earth simply is not yielding enough of it at these suppressed prices to satisfy the monsters of modern industry. If you think the crisis is contained to the commodity markets, you are missing the forest for the trees. This brings us to the true culprit of this macroeconomic tragedy, the Federal Reserve, the Western central banking syndicate, and the accelerating, terrifying death spiral of the United States dollar. Just days ago, at their late April meeting, the Federal Reserve held the target federal funds interest rate steady. In his final press conferences before stepping aside, Jerome Powell tried desperately to project an aura of absolute control. He looked into the cameras and told the world that the economy was resilient, that the labor market was holding on, and that they were carefully balancing their mandates to engineer a soft landing. It is a complete manufactured facade. It is high-level financial theater designed to keep you asleep while the house burns down around you. The Federal Reserve is entirely, hopelessly trapped. Look at the geopolitical shocks we have endured in just the last 12 months. The massive U.S. naval blockades, the disruption of millions of barrels of oil daily, the soaring risk premiums in the Middle East. Inflation never truly went away. It simply embedded itself into the marrow of the economy. It remains dangerously, persistently sticky. The Fed cannot drastically cut interest rates because if they do, the suppressed inflation will immediately detonate into hyperinflation. The currency will crack, and whatever is left of the working and middle class will be utterly eradicated in a wave of skyrocketing costs for food, energy, and shelter. But they are equally paralyzed on the other side. They cannot meaningfully raise rates to actually fight inflation because the United States government is drowning in a mathematically unpayable, incomprehensible ocean of debt. We have blown past $35 trillion in national debt. The interest payments alone, just the interest to service the debt, are now consuming the very lifeblood of the American economy. The government is borrowing money just to pay the interest on the money they already borrowed. This is the terminal stage of a Ponzi scheme. So, what is their only way out? What is the unspoken, unwritten policy of every central bank facing a sovereign debt crisis? They let the currency quietly, violently burn. They allow inflation to run significantly hotter than the officially manipulated statistics claim. They use inflation as a silent, invisible tax to steal the wealth out of your savings account, your 401k, your pension, and your wages, all to inflate away the real value of the national debt. This is what Wall Street calls the debasement trade. Every single day you hold your hard-earned wealth in fiat currency, in unbacked paper promises. You are bleeding purchasing power. You are holding a melting ice cube in the palm of your hand, and the heat is being turned up by the very institutions sworn to protect you. While the West plays games with paper derivatives, debates quarter-point interest rate fractions, and prints trillions to fund endless deficits, the East is making its final, lethal move on the geopolitical chessboard. The de-dollarization trend is not just a buzzword for alternative financial media anymore. It is the defining, inescapable financial reality of 2026. The BRICS nations, Brazil, Russia, India, China, South Africa, and their dozens of new allied members, are executing a masterclass in practical, methodical gradualism. They are not trying to drop a bomb on the dollar overnight. They are simply, quietly, building an entirely separate alternative economic reality where the US dollar is completely and utterly irrelevant. Let me give you a staggering statistic that the mainstream financial media deliberately buried in the back pages. In March of this year, just weeks ago, the People's Republic of China imported approximately 500 metric tons of silver in a single month. I need you to let the sheer scale of that number sink into your mind. 500 tons in 1 month. That is not normal industrial supply chain management. A country does not buy 500 tons of a precious metal in 4 weeks just to smooth out the manufacturing pipeline for solar panels. That is sovereign, strategic stockpiling. China is aggressively hoarding the physical metal while simultaneously implementing strict export restrictions on the very green technologies that require it. They are cornering the physical market. They are taking the metal off the board. At the exact same time, Indian demand has been surging to historic, unprecedented levels. Indian importers are draining the London vault dry, forcing massive, panicked reallocations of global bullion just to keep the physical delivery system from completely seizing up. The East understands a fundamental truth that the arrogant, financialized West has tragically forgotten. Gold is the money of kings. Silver is the money of gentlemen. Barter is the money of peasants. But debt, fiat currency backed by nothing but a promise, is the money of slaves. The BRICS nations are actively trading physical commodities for physical gold and silver. They have established interoperable payment systems outside of the Western SWIFT network. They are settling cross-border trade in local currencies backed by hard assets. The bifurcation of the global reserve system is no longer a theory. It is complete. We now have a dollar-based system built entirely on credit, extreme leverage, and the diminishing threat of military force in the West. And standing against it is an increasingly robust gold and silver-backed system being built by the non-aligned nations in the East. When the Eastern powers decide they no longer want to play the paper game, when they stand for mass physical delivery on the COMEX and the LBMA, the paper illusion will shatter into a million pieces. The leverage will unwind in days, if not hours. And when that day comes, the price of silver will not be measured in how many fiat dollars it takes to buy an ounce. It will be measured in how many physical ounces it takes to buy your survival. We talk a lot on this channel about charts, about structural deficits, about millions of ounces, basis points, and macroeconomic theory. But we must never, ever forget the human element. We must never lose sight of what this actually means for you, for your family, for your children, and for the generations that will inherit the wreckage of this financial system. What is money, truly? Think about it. Money is not paper. Money is not a digital digit on a bank screen. True money is the stored, physical representation of your finite time, your raw energy, and your physical labor. When you wake up early in the morning, when you leave your home, your spouse, your children to go to work, you are trading a fraction of your finite human life for a paycheck. You put that paycheck into a banking system, trusting, believing, hoping that the human energy you stored there today will be waiting for you tomorrow, next month, or 20 years from now when you retire. When the Federal Reserve prints trillions of dollars out of thin air, when they purposefully debase the purchasing power of the currency to bail out a corrupt banking system, they are not just adjusting a macroeconomic lever. They are reaching backward through time, and they are stealing the hours of your life you already worked. They are violently confiscating the security you sacrificed so much to build for your children. Inflation is the most insidious, evil tax ever devised by the human mind. It is a silent, invisible thief that sneaks into your home under the cover of night. It takes nothing physical. Your television is still there, your car is still there, but it leaves you with less. It hollows out your life from the inside. Look around you today in 2026. Look at the reality of your community. The middle class is not just struggling, it is being systematically eradicated. The gap between the financial elites who own hard, tangible assets and the working class who rely on a depreciating fiat paycheck has become an unbridgeable chasm. The forgotten man and the forgotten woman are working harder, sweating more, taking on second jobs, missing more dinners with their families, only to wake up and find that they cannot even afford the same basic groceries they bought a year ago. This is the great tragedy of our modern era, and honestly, it breaks my heart. I sit here and I read your comments every single day. I read the emails you send me. I hear your stories. The overwhelming, crushing anxiety of trying to survive, trying to provide, in a system that is fundamentally rigged against you at every conceivable level. The terror of waking up one day in your 60s or 70s to find that the pension you bled for is functionally worthless because the currency it is paid in has collapsed. But within this darkness, within this engineered chaos, there is a profound hope. There is always hope, provided you have the intellectual courage to see reality for exactly what it is, and the iron discipline to act before the sleeping herd wakes up and panics. Throughout 5,000 years of recorded human history, through the rise and violent fall of the Roman Empire, through the tragic collapse of the Weimar Republic, through the hyperinflationary spirals of Zimbabwe, Argentina, and Venezuela, fiat currencies have a mathematical, undeniable 100% failure rate. Every single paper currency ever created by man eventually returns to its intrinsic value, which is exactly zero. But silver? Silver has never gone to zero, not once in 5 millennia. Silver is not just an industrial commodity or a line item on a portfolio statement. Silver is physical, financial armor. It is a silent, tangible rebellion against a corrupt, dying monetary system. When you hold a physical 1-ounce silver coin in the palm of your hand, you are holding absolute, uncompromising financial sovereignty. You are physically stepping off the matrix of central bank control. There is zero counterparty risk. It does not require a password. It cannot be hacked by a cyber attack. It cannot be printed by a corrupt politician. And it cannot be canceled by a digital banking system that disagrees with you. The current pullback in the paper price, driven entirely by COMEX margin hikes, algorithmic trading, and desperate paper liquidations, is not a defeat. For those who actually understand the underlying fundamentals, the 46 million ounce physical deficit, the explosive EV, solar, and AI demand, the relentless strategic buying by the BRICS nations, this artificial paper price drop is the greatest gift of your financial lifetime. It is an extraordinary, rapidly closing window of opportunity to convert your depreciating, dying fiat illusions into tangible, historical, real wealth before the paper disconnect violently resolves. And mark my words, when the paper derivatives and the physical reality disconnect for this long and stretch this far, the resolution always, always comes violently. The paper price will eventually be forced to snap up to meet the physical reality, and the repricing will be breathtaking. We are officially entering the final, chaotic stages of the great fiat experiment. The Federal Reserve and the Western bullion banks have effectively destroyed the global silver supply by suppressing the price so low for so long that they completely disincentivize new mining exploration, while simultaneously incentivizing massive, unsustainable, explosive industrial consumption. The mathematical spring is coiled tighter right now than at any point in modern financial history. The collapse of the dollar's purchasing power is accelerating every minute. You don't need a PhD in economics to know it. You can feel it in your bones. You feel it in the grocery store aisle, at the gas pump, in the skyrocketing insurance premiums, and in the inaccessible housing market. Do not let the green and red digital illusions on your television screen convince you that everything is fine. Do not let them lull you into a false sense of security. Take control. Protect your family. Protect your raw labor. Protect the finite time you have on this earth. Thank you for being here with me today. If this message resonated with your core, if you value the harsh truth over the comforting, dangerous lies of the mainstream financial media, please hit that like button right now. Share this video with a family member, a friend, someone you genuinely care about. They desperately need to hear this before the physical window closes forever. If you haven't yet, subscribe to my channel, Aurex. In this channel, you will continue to find the real information, the real unfiltered market updates that everyone else is too afraid or too compromised to tell you. I love all of my subscribers for your incredible, unwavering support. You are the sole reason I sit behind this desk and do this. Stay vigilant, stay prepared, and always remember, real wealth is physical. I will see you in the next update.